Hello, good morning, everybody. It's Harry Swaminathan. Happy Monday. It's about 11:40 a.m. and I think the market started off with a slightly downward bias, but we seem to be coming back to the flat line. So let's just take a review of our positions. Now, the EEM position has climbed out nicely, so we can see we have a profit. So at this point, we don't want to touch it. Just let it go. The FedEx also is starting, the time decay is slowly starting to kick in. You can see now we've even though FedEx is up, we're still up for the day. So that's pretty good. So we'll leave it as is. The Green Mountain is very interesting. So you can see this calendar start to lose money. It's because it's got only 4 days left. I mean, this short straddle, I mean to say. We have the entire position is sort of a diagonal because we have a short straddle here and a long straddle here. So that's basically like a calendar spread. But what you can see is these things are starting to lose money. You can see just on these two, we are up about $600 here. Of course, now we've already pocketed $1,000 on GMCR. So we need to keep track of this. I'm keeping track of it, but I hope everybody else also will be keeping track because that's the only way to monitor what's going on with your position. So I would highly urge you to keep a journal entry. So because not yesterday, last week, we had the 80 call, the 77.5 put and the 80 call. So when we closed the 80 call, we booked $1,000 profit. So net our loss right now is only 2,600. You can see slowly it's climbing out of the hole, and this is exactly what we'd like to see. So we'll keep this. This has only about 4 days left to expiry, and if we can let this short straddle expire, fairly worthless, I would say. I mean, you can't expect it to be zero, but if we can, let me expand this here. If we can let it expire to a certain degree, so if you can see here, we have $3,000 left in this. So out of that $3,000, even if we can capture 2,000 out of that, that would be a good trade. Google, I don't want to do anything yet because it is at 885. Our short is at 850. So we do have some room here. Time is slowly passing by. So I do expect Google to come back, bounce back up to the 900 level, at which point it'll be at the center of our, let's go take a look at Google. All right, yeah. So right now Google is right here, 885. Yeah, it is coming down to an adjustment point. So I guess if it goes below 880, that's when we would adjust this. So after that, let's look at HLF. HLF is very interesting, and this is how we come out of the trade here. You can see that, HLF, if you look at our position, let's go take a look at HLF here. And because HLF is showing a nice profit now of 1930. Now bear in mind, we are down 2,500. So you got to keep this journal entry. So HLF, we are down 2,500. But as you can see, we've recovered 1930 out of that already. So, we are only down 600 on Herbalife at this point. So this is a trade that had gone bad on us last week. And just in a matter of 1 week, we've been able to climb out of this hole. Both Herbalife and GMCR are in a similar situation where we are going to let time decay work in our favor. And here, even though these are naked shorts here, if you look at the risk profile, you can see that we are right here and our break evens are at 55 and 79. So we've got quite a bit of room right here. There may be a potential adjustment we'll do to Herbalife, but not yet. The only thing I was thinking, if Herbalife went down to about 65, then we would want to pocket the profit on the 70 short call and open a 65 call, which would be a short call again, which would be at the money. And whenever you have options at the money, the value of that, the extrinsic value is the highest. So you really can get the maximum premium at that point. So anyway, so that's as far as Herbalife. The only thing left is LinkedIn got an upgrade today. So here we have a bear put. So LinkedIn got an upgrade. It's right now over here. So we are down about $600. I want to see, how much, and so the thought process in LinkedIn would be something like this. Here we are on LinkedIn, and you can see that our short put is having a profit of 1850. So LinkedIn is at 239. Our long put is at 220. So at some point, let's say if LinkedIn crosses 240, maybe perhaps is approaching 245, then what we would want to do is pocket the profit of the 210, because at that point we hopefully should have about $2,200 or $2,300 in profit. Granted, this number also will go up. So instead of 2475, maybe it's 3,000. But at that point, what we would want to do is close this short put at 210 and open a new short put at 225. So basically, we'll be turning a bear put into a bull put. And by doing that, we would negate the losses on this. So that's as far as LinkedIn is concerned. Let's take a look at Priceline, because Priceline started moving down. I had a limit order. I was out this morning. So what we I think at 990 and 1010. So let's see the positions. So we have 990 and 1010. That's right. And we have and I have a 940 and 920. But Priceline, we won't make a huge profit, because I think we lost about $1,000 when we made this adjustment this morning. So our max profit now is 1,800. However, what this doesn't take into consideration is that we don't have the $1,600 loss we took on Friday. So basically, if Priceline expires between 940 and 990, we would be up $200, basically even after you count all the commissions. Basically, it'll be an even trade, and that's fine, because again, it's a trade that went down, and we wanted to come back to break even. So some trades will go like that. So that's as far as Priceline. And let me just take a look at GMCR graph right here. Okay, that's good. So basically our shorts are at 77.5. So ideally what we would like to see is GMCR sort of move into the middle over here, and that would be great for the position. So that's as far as the trade updates today. I don't think we are doing any adjustment at this point, not to Google, not to LinkedIn, and Priceline's already done. So, we'll just leave these as is. Thanks.